Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining space this week. Joining me today is John Feneck, founder and CEO of the Feneck Commodities Report. John, welcome back to Kitco.
Thanks, Paul. Always good to see you.
Now, before we start, please note that Kitco Metals and Kitco Media provide news services only and do not offer tax, legal, or investment advice. The opinions expressed here are those of the contributors and do not necessarily reflect the views of Kitco Metals. For complete terms and conditions, please visit kitco.com. And of course, if you like what you see, don't forget to hit that subscribe button. Now, the gold price came within $12 of hitting $2,800 per ounce this week before pulling back about $50 on profit taking. It then yawned at a US jobs report that showed jobs growth is slowing. John, what is going on with the gold price?
Yeah, I wouldn't read too much into gold's lack of follow through today on November 1st based on that poor non-farm payrolls read. And the reason is because we have the election 2 business days from now, right? If we didn't have the election this close, I think you would have seen a much better reaction in gold, in silver, and in miners today. And the day isn't over, so we'll see if we get some follow through in the last few hours. But I think what we're seeing now, Paul, is just some people, as you saw, a ton of selling yesterday, taking some profits, and we're in that camp, right? We're not going into the election fully invested because we want to make sure we have some dry powder.
Okay, I want to talk about the election in a moment, but before we get there, let's look at some of the third quarter results. Agnico Eagle Mines was the big reporter this week. It announced some records with record earnings and record free cash flow generation. But again, the market seemed unimpressed. The stock was down 2% on the day, although that could be because of the market weakness in the gold price from the profit taking that you just mentioned, John. Agnico has done a better job than most of its peers in controlling costs, but still, it's all-in sustaining costs increase in the third quarter. They were up 10% quarter on quarter to $1,286 per ounce. It had an AISC margin of more than $1,100 for the quarter. But John, let me ask you, take a guess. Did its all-in sustaining cost margin go up or go down this quarter?
Their margin, I'd say up.
Well, I think it went down. It went down to 45%, according to my calculations, from 50% last quarter. Centerra Gold reported this week they did a better job. Its all-in sustaining cost margin rose to 52.8%, and it continues to return capital aggressively to shareholders. Newmont disappointed with its results last week. Agnico's were better this week. John, how do you see the third quarter paying out? What are you encouraged by? What are you worried about?
I'm encouraged by Agnico's numbers October 30th. I watched it trade after their announcement because they came out after the market, and the stock hit 90.50. So it was up about 1.5%. But when the big boys came in yesterday on Halloween, they took it down, like you said, over 2%. Which is ridiculous. When you post, even if your AISC goes up to 1286, as you said, you're still clipping such a huge margin. They beat by 12 cents, by the way. So if you're beating by 12%, your revenues look great, you have record free cash flow, and you're down, that's mining for you, right? If it said Agnico Eagle Technology, the stock would be up 3 or 4%, right? It's just unbelievable. So, I think Newmont deserved to be down, but also not to be down what they were. You know, their costs went up to over $1,600 an ounce. That's substantial. However, I just think that they're going through growing pains with this whole Newcrest merger. I really don't think this is something the investors have to worry about long term, meaning like a year or two from now. If gold's at 3,000 plus next year, Newmont's going to kill, Agnico's going to kill. You have to own these things before, the obvious happens, which is Bank of America, Citi, so many large U.S. banks are calling for $3,000 gold next year. So, conversely, Paul, I think it's important to remember that big banks got it completely wrong in the past. If you look at their estimates, 2015 Q4 going into Q1 2016, they were all calling for $900 to $1,100 an ounce. And that was when gold was around $1,050, right? And then gold just took off in 2016. So I think this time, 8 years later, some of those same, executives are saying, I'm not going to get this wrong again.
Now, John, let's address the elephant in the room. And of course, the donkey in the room. November the 5th is the US presidential election. In the UK, where I'm from, we remember November the 5th as the day that Guy Fawkes tried to blow up the UK Houses of Parliament and King James I in 1605. The US electorate faces two very polarized candidates, with the result, whatever that may be, likely to be incendiary for the losing side. Hence, I'm wearing neutral colors today. John, you're one of the more than 160 million people eligible to vote in the United States. I'm not going to ask you to call the result, but you said this week that you sold down some of your positions in mining stocks and you're moving to cash as a precaution. What are you looking to protect yourself from?
A Harris victory. A Harris victory would be a knee-jerk reaction down on November 6th in the broad market to me. And miners are equities, right? I learned that from Rick Rule in 2016. He kept saying that over and over again. And he's right? Stocks trade like stocks. And so you have to be able to get out of the way a little bit here because we've had a really good run in 2024. And I figure I can put my positions back on very quickly. I've been doing this a lot of years. So if Trump wins, I can go heavier in right away. We're going to be ready to go. But I think a Harris victory would surprise Wall Street in not a good way. And don't forget, Paul, November 5th is right in the middle of tax loss season, right? So I think there's a lot of eyes on the outcome on Tuesday. And you never mess with the institutional players like Fidelity, Vanguard, BlackRock. They run the market, in my opinion.
In terms of your sort of going to cash, are you selling out of positions completely or just selling them down and building some cash or
just trimming for the most part? Yeah, just trying to take some profits because, as you know, I buy 6 to 10 times on the way up and I'll sell, maybe in thirds on the way down kind of thing. So I'm not taking like full positions off.
Okay, now the election is between Donald Trump and Kamala Harris. Talk me through, John, what you think the impact of each candidate could have on the mining sector.
Well, we've been saying this in interviews with you, Paul, all summer, and I'll just say it again one last time. Job growth is going to be important to either candidate. When you look at the anemic non-farm payrolls number this morning, which missed really, really badly, creating virtually hardly any jobs. I mean, it's you can blame it on Boeing, you can blame it on whatever you want, because I'm sure they already have. But it's a problem for whoever gets into office in 2025, right? And I think Trump would do a better job of addressing that than Kamala Harris would in our sector, that is, right? Because Trump, is a believer in gold. He's not out there pounding the table on why, mines need to be built. But I guarantee you, if someone in his cabinet were to show him the kind of delays that we see just in the U.S. here in terms of permitting at the state level, at the federal level, it doesn't matter. It's archaic. We have to change. We have to get to a better place in this country and create job growth in our sector. It's right in front of us.
Now, that was part of the swamp he was looking to drain when he was elected president last time around, reducing the permitting time. The Biden administration has sought to advance the development of critical minerals projects in the USA, and this week saw the US Department of Energy finalize a $2.26 billion loan for Lithium Americas Thacker Pass mine in Nevada. Also this week, Ioneer's Rhyolite Ridge Lithium project, also in Nevada, attained a key permit, although environmentalists are suing the government over that. John, the Biden administration has been sort of big on lithium, but not big on copper, which to me seems very, very strange. Why do you think that is?
It is strange. I think I really couldn't answer that question, Paul. I will say U.S. Gold, which is a holding of ours, USAU, is a gold and copper project in Wyoming that got permitted this year. So, I mean, that's very positive. There hasn't been anything like a hard rock mine like that that's been permitted in decades in Wyoming. So I think that's positive, but I do think it is a state-by-state thing. And I think some states like Nevada, Wyoming, are more forward-thinking than others, like California, right? So you have to invest, accordingly.
We have more to come, but first, a word from our sponsor.
This episode of Digging Deep is sponsored by the 6th edition of the Mining Investment North America Conference and Exhibition, returning to Toronto, Canada on November 6th and 7th. Organized by Spire Events, this boutique strategic mining investment and capital raising conference will feature approximately 150 senior-level executives, over 60% of whom are investors and mining companies. Confirmed speakers include Tracy Hughes from the Critical Minerals Institute, Matthew Siegel from Strategy Corp, and Stephen Bowles from Nabari Partners. For more information, visit mininginvestmentnorthamerica.com.
John, I want to follow up on the theme about gold in the US that you were talking about just before we took the break. Minera Alamos announced this week it's to acquire Sabre Gold in a 21.6 million Canadian dollar all-stock deal to add the Copperstone Gold project in Arizona to its pipeline, which the company said could help it grow its production to 150,000 ounces a year. John, you hosted today a panel on US gold developers. What is the climate like for developing gold mines in the US like at the moment?
Yeah, I think it's positive, and it's going to get more positive in the next 4 years. If Trump gets in, for sure. I don't know how that looks under a Harris administration, but I do know that at some point during her tenure, she would be forced to look at the fact that China is dominating the commodities world. And if China invades Taiwan during her tenure, I think that her tone would change dramatically, right? So I think these are things that investors are not really considering. I think the market assigns, less than a 5% probability to China invading Taiwan in the next 4 years. I think that the market is obviously negative on mining if Harris gets in, because she would just continue some of the things that Biden has done. But I think that's short-sighted. You have to look at the fact that China is dominant in the commodities world, period, and they're becoming more dominant, and we need to play catch-up in the U.S. So that's kind of how I feel, Paul.
Okay, well, let's end today, John, with what for me was a very, very curious announcement. Aura Minerals said it will take a 43 million Canadian bet in Guatemala through the acquisition of gold developer Bluestone Resources for cash and shares, up to a 51% premium there, conditional on its Cerro Blanco gold project reaching commercial production. Bluestone sought to produce 197,000 ounces a year following the completion of a feasibility study in February 2022, having changed tack with an intention to develop an open pit mine rather than an underground mine that was the subject of its 2019 feasibility study. I really didn't see this one coming. Recent years have seen Guatemala become a graveyard for mines and mining projects, with casualties including the Feneck nickel mine, Tahoe Resources Escobal silver mine, and the El Tambor project. This deal echoes Pan American Silver buying Tahoe Resources in 2019 for the upside potential of being able to bring Escobal back online. 5 years later, and we're still waiting for that to happen. John, the Lundins couldn't get Cerro Blanco over the line. Will some Brazilian charm do the trick?
It's a great question. I'm not completely up to speed on this. I will say that I was a Tahoe shareholder when Pan American took them out. And yes, 5 years later, here we are. But I did meet with Aura Minerals for the first time a month ago at a conference, and was very impressed with what they were doing. They have 4 producing projects, I believe, as well as 2 that are smaller, and this would give them another. I don't know Guatemala as well as you do, Paul, in terms of a jurisdiction, but I will say that, a lot of our assets right now are in the US, Canada, and of course we would be adding heavily to Mexico if we get to see some permitting happening there under the new president.
Okay, well, if they can pull it off, could be the deal of the century. But I have some very deep doubts about that. John, that's been great. Thank you very much. John Feneck, thank you very much for joining us today.
Of course, Paul. Thanks.
And if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.